Hello traders, you're welcome back to the Forex Geek channel. Now in this particular video, we are going to break down the SMC Day Trading Strategy. Okay, it's a framework that helps you use smart money concepts for intraday trading. Now, day trading is about capturing moves within the same trading day, right? So unlike swing trading, where positions can be held for days, or scalping, which targets very quick entries, day trading gives you room to take advantage of intraday swings while still closing trades before the day ends. All right. So when you add smart money concepts to this style, you gain a structured approach that helps you trade in alignment with institutional activity. Okay, the first key element is market structure. On intraday time frames like the 15 minutes, the 30 minutes, or even the 1 hour chart, um, structure tells you the bigger picture of what is happening within that day. Are we seeing higher highs, and higher lows, like what we can, point out from right here? If you're, taking it from the bigger picture, right? Are you seeing higher highs and higher lows, or are you seeing lower highs and lower lows? That is a bearish cycle, or are you in a ranging market? So spotting a shift in market structure intraday is often the first sign that smart money is pushing price in a new direction. Okay. So the next thing is liquidity. Every day the market hunts liquidity. All right. That means stop losses above highs or below lows. All right. Remember that if you want to sell around the resistance zone, you would likely set your stop loss some pips above that resistance. So sometimes there's usually stop hunt or liquidity sweep. The smart money might push price and hit your stop loss, and then price will reverse back. It happens sometimes, right? So liquidity is something that you have to consider. Stop losses above highs or below lows, as well as clusters of pending orders. For example, those that are breakout traders that might set buy stop orders just above resistance, or set sell stop orders just below support, right? So as a day trader, paying attention to liquidity zones is critical. Price often sweeps liquidity before making its real move, in as much as it might not happen all the time. But there are times when you see price sweep liquidity. And what do we mean by sweep liquidity? The price will go and hit your stop loss and reverse back in your direction. It happens, right? It might not happen all the time, but it happens. If you have been in the market for a while, you might have experienced this. You might have experienced it at some point. Okay? For example, now just see what happened here. If you see price bounced off here, 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 this is an obvious support zone. You can see how price was bouncing off several times. But look at what happened here. Why did price, tell me, why did price come below this support and hit people's stop loss and go back up? So it happens sometimes, right? Some persons might have entered a buy trade and set their stop loss around here, and look at what happened. Hit their stop loss, and then price went back up, and look at the massive upward move. Can you see the massive upward move? Okay, so that's the reason why you have to be careful if you're a breakout trader, so that you do not fall victim of a liquidity grab. Okay, so you have to pay attention to these zones, all these liquidity zones. Pay attention to them: above highs, below lows. All right. um you need to understand all these concepts, to keep you from being trapped in false breakouts. Then we come to order blocks. These are areas where institutions leave their footprints through strong impulsive moves. For day traders, marking intraday order blocks is a powerful way to frame your setups. So when price returns to these areas, the areas of order blocks, right, combined with liquidity sweeps and structural alignment, you get higher probability entries. But no matter how clean a setup looks, you need confirmation. Okay, you always need confirmation. For example, we had a break of structure around here, right? Higher high. You can see this is a low, this is a high, right? This is a low, this is a higher high. So this move broke above this particular high. So as a result of this break above this particular high, we had a break of structure. So you're going to be looking for the last bearish candle before that break of structure. So that last bearish candle before that break of structure is now going to be your bullish order block. So you'll be looking out for price coming towards that zone to retest that zone. Okay, so in that case, you can see that price actually got really close to this. All right, so this is going to be our bullish order block. Okay, but you remember that you always need confirmation. It's very, very necessary. Waiting for confirmation prevents you from jumping in too early. That could be a smaller structure shift, a liquidity grab, or a rejection week within your zone. Okay, within your zone. Confirmation is what makes the difference between random entries and structured day trading. Now, let us put it all together into a framework for the SMC Day Trading Strategy. Okay, you have to start by analyzing the daily and the 4-hour charts. Okay, you can actually start with the daily, or you can even start with the 4-hour charts to understand the overall market direction. Then you drop down to your intraday time frame. It could be the 15 minutes, it could be the 30 minutes. All right, or it could even be the 1 hour to map out your structure. Then you identify liquidity zones above highs or below lows. You mark out the order blocks like I did here, where strong moves originated. Then you wait for price to return to your zone and give confirmation. Only then execute your trade and manage it within the same day. Okay, so this framework is simple but powerful because it blends structure, liquidity, and order blocks with intraday execution. So it ensures that you are not guessing or reacting emotionally, but trading in alignment with smart money flow. So to recap, the SMC day trading strategy focuses on three main things, which are identifying structure shifts, tracking liquidity sweeps, and using order blocks for entries. Add confirmation to refine your trades, and you'll have a complete system to guide your day trading routine. If this breakdown gives you value, make sure to click the like button and subscribe to the channel. Turn on the notification bell so you don't miss the next Smart Money Concept strategy video. Thank you for watching, and I'll catch you in the next one. Happy trading.